Right guys, welcome to this week's video review from Magnetic Trading. So throughout this month we've been giving you a journal of our lifestyle trades. Remember, at the beginning of the month we gave you this list that you're looking at of trades that we put in the diary that our mentorship clients and pro traders could execute on specific times and specific dates of March. So far we've had 4 winners. The last one was the 19th of March, which was the triple witching expiry. If you took action, got involved with the mentorship program, you would have learned this trade. And of course, if you're on the advisor program, you would have joined us in the live room and traded this live with us. We still have 3 very high probability trades at the end of the month, the 31st of March, to execute. So one of these trades has not actually lost since we started teaching it to our clients, so you can still take action. And remember, these sorts of trades can be used for the rest of your life. It's not just March that these are setting up. Every month we have high probability setups setting up, which you can put in your diary at set times and plan your life around them. So let's go over live to see how we got on with the expiry trade on the 19th of March. Hey guys, it is expiry day, so we're looking forward to this trade. It has an 88% chance of winning, so let's get down to the laptops and see what we're going to be doing today. Those of you that have been following our mentorship trade menu this month will have seen we've already banked 3 to 4 winners already. This is our 5th, and we hope it's going to be a winner. We want this down to around 67.34 would be our first entry on this. So to buy us at 67.34, guys. If it gets down, that's going to put our first position in at that level at 67.34. So let's see if we can get down to that level. Alright guys, so we're in the first position here, and the next position down would be at 67.14, 14 to 15. So we get down to 67.14.15, we'll add another position. That'll be our next position. Alright, that's just triggering now, guys, so you want to be into that position. Expiry is still going on for this trade. Hard stop on this trade is going to be 66.77. That's the hard stop to place on this trade now, 66.77. So if you put that into your trading account now, 66.77. Target on this will update as the trade continues, but 66.77 is the hard stop on this trade. 67.40 for the target on this, guys, at the moment. I'll update you if anything changes, but around 67.40 is the target on this trade. The stop, of course, has a hard stop at 66.77. To 67.34, we will move our stop to entry on our second position at 67.14, so we can't lose on the trade, and we'll actually run the trade up to 67.47 is our stop, which is entry, so we can't lose on the second position. Now we've taken half profits, and I'll just give you the target now for this second position that we're running. Right guys, so as it stands at the moment, our risk was 4% on that trade. We've now managed to reduce that down to 0.1% if this trade hits our second entry at 67.14, so pretty happy with that. That is classic risk management for even a high probability trade. Never go in just thinking, you know, always work out what the worst case scenario is. So we're all good on this trade now. Even if it comes back down to 67.14, we're gonna lose like 0.1%. So 67.47 is the final target for this trade. It's the final target for this trade at 67.47. Are we all happy with that? With very high probability trades, you always need to assume that the trade will lose when you're actually trading. So work out the worst case scenario and risk management. That's what we're here for at Magnetic Trading. We guide you through the risk in a live environment. Take the emotions out, so you don't need to be stressing about this. We carry all the heavy load for you, and you just basically bank the profits along the way. That's the idea. So let's now go to the screens and let's have a look at the expiry action, and there'll be a lot for you to learn from this. Okay guys, this is a video review of the FTSE triple witching trade that we did in the live room for you on Friday, which resulted in a nice win in the end. And this trade has an 88% chance of winning. So it's a very high probability trade, one of the highest that you're going to get in trading. We do it certainly every quarter officially. We're not going to disclose the official rules within this video because that is only for those of you that are participating in ProTrader or the mentorship program, so you get the full system rules. But we'll talk about how we traded this and gave you instructions and the management of this trade within this video. So we actually had a few audio problems within the day to start off the day. A couple of client mics were on for some reason, so we had that to deal with initially, but eventually we got that sorted. And just before the open at 10 past 10, so expiry on the FTSE, the triple witching event lasts 5 minutes. It starts at 10 past 10 and it finishes at 10:15 UK time. So in Sydney, Australian time, that was 10 past 9 PM to 9:15. And what we're expecting is a big move up or down and then a retrace back to the start of expiry at 10 past 10 UK time. So the instructions in the live room were to buy if it spiked down to 67.34. So let's just put that in. And as it moved down, we said another instruction to buy at 67.14. The risk on these trades were based on 20 points for this trade, and we said don't put a hard stop in place, but the risk for the trade was 20 or 21 points. I think it may have been 21 points. I can't remember. I think it was 20 or 21 points I told you in the live room. No hard stop. The reason we don't put the hard stop in during the 5 minutes is because the action during expiry triple witching is very volatile, and if you put a hard stop in, you'll get stopped out and then lose the potential for making money. So we wait for expiry to conclude and then we put the hard stop in. But we must base the risk on something, and that was the risk profile on it, 20 points. So that's how you work out the stake you want to put into the trade. Once expiry was over, we bought it at 67.34 and 67.14. We then put a hard stop in place at 67.77. Sorry, 66.77. So let's put that in. However, once we viewed what the possible outcome for losing on this trade was, which was 4%, we decided that was too much for the service. So we decided to intervene with the official rules for expiry trade, because actually it was a bigger stop for expiry if you follow the system rules, but we didn't want to lose a big amount, so we intervened. And actually even going down here was too much for us. So what we then decided to do was to take out the first position once we got up to 67.24, and that was really just to reduce the 4% risk down to around 2.5 to 3% had it been stopped out. Now, there was only a 12% chance of this trade losing, but it's still 12%. So you still got to manage the trade accordingly, because even though the chances are it's going to win, we still don't want to be losing a large amount on our portfolio. So you're probably wondering, well, why didn't you take the position down here, Mark? Why didn't you take that off here? Why did you take a small loss on this position at 67.34? Well, this position down here at 67.14 has a greater chance of making more money than the position up here. So as the market came up to 67.24, we decided to close the first position for a 10-point loss. So we're then left with this position down at 67.14. And again, ultimately we're looking for a retrace back up to 67.53. So as the market moves up, we decided to take half profits on this trade at 67.38, which was up here. So 67.38. So that's, remember, we've closed out our first position. We've only got the other position at 67.14. And by the way, if you didn't get into the second position at 67.14, you had plenty of time to get in, because we did reiterate that in the live room to get in, to make sure you were in at 67.14 when it was here, and it consolidated for a good 5 to 6 minutes. So plenty of time to make sure you had the position in here. And as I said, that we rode that up to 67.38, took half profits. So we closed half the position at that point in time, and we moved stop to entry. Now at that point in time, we can't lose on the trade, and had it retraced back down to our entry, we would have lost 0.1%. So from having a 4% potential loss on this trade, we reduced that all the way down to 0.1%, and still gave the trade plenty of room to come out with a nice profit. So the trade we said to target was 67.47 for the remaining target after we'd taken half profits. 67.47 was up here, and actually that did hit, but with the spread on the FTSE, so the broker spread, it missed by 0.5. So it did actually hit on the charts, but because of the spread, it just missed. So because of that, we issued an alert on the app to come out of the trade at 67.39, just because it had missed by 0.5. There's no point in holding on to the trade, because the trade had already fulfilled and closed the market function. So at this point here, we deemed at 67.47, it had basically fulfilled market function, closed the market inefficiency, and the edge is no longer there. And actually the market then moved back down. So we were happy we did that. So that was the FTSE expiry trade. So that was another nice win for the service, and actually that was following a win on the advisor service from the morning. We had a nice, it was in the report, even though we weren't in the live room, we put in the report that it was an official trade, that should we spike down to 67.02, you were to buy the FTSE. So that did actually trigger at the open during the first 5 minutes, and that resulted in a nice win as well. So nice 2 winners on Friday for the advisor service on the FTSE market.